you can ask some specific questions that you have, and then we kind of just go down deeper into it.
Um, the first question I believe is how do we set alerts? So like you give the indicator, like that little triangle that tells you either it's gonna go put a call.
Okay, let me,
You know what I'm talking about?
yeah, let me pull it up. Okay. All right. So
See
on
one.
the you see like talking about like the bicycle like
Oh, right there. Yeah.
okay. So with these bicycles, did you in that art confirmation? So these bicycles we use them in partnership with the art confirmation and the and so that confirmation system. Let's drill down on that one. I'll show you how we're going to use these buy and sell signals,
Okay.
and this will help us to get in and out of trades with more than one confirmation. So when we're trading, it's just like having witnesses in like a court. You know what I'm saying? You don't want to just have one witness. You want to have like two or three or more, as many as possible to kind of confirm, the direction of the trade. That way it betters your odds of winning that trade, okay?
Mm-hmm.
And so what we use these buy signals for, so let's go to it. How do you normally trade? You normally try to swing trade or you day trade or you do both or what?
More swing trading.
Okay, so what do
I'm,
you
I'm
normally
fairly new, so I've only been doing it a couple months, and I work full time. So
Okay, swing trading then.
yeah.
Okay. All right, so if you're swing trading, you want to make sure that you're living mostly on like the 4 hour time frame and above. Okay.
Mm-hmm.
Because when you get your confirmations, so a confirmation usually lasts about 6 to 10 candles. And so that means that if you got into a trade off of a confirmation on a daily time frame, you will have like a week or a week and a half or so to give that trade a chance to go ahead and run up and hit a target. Okay.
Mm-hmm.
All right. So we're gonna focus on this art confirmation. All right. So on the wolf chart, we have three different moving averages. Okay. And so the moving average that we use, I'm gonna just show you one of them at a time.
Mm-hmm.
All right, so this blue one that flips to the color red, this is our 12 EMA. Okay. And so that EMA at the end of it just stands for exponential moving average. But the more important part is that anytime you have a moving average, which is this lines right here. Matter of fact, let me just take a lot of this stuff off so we can just focus on what's important right now, which is that moving average. And so let's come here. All right. So this moving average is this line that you see coming through these candles and,
Mm-hmm.
and doing all this moving, right? And so with a moving average, the whole purpose of this moving average, is to show you what direction the stock is about to move in. And so all we care about when we're trying to trade shares or stocks, not mean shares or options. We care about what direction is that stock about to go in, because if we buying a call, we're expecting or predicting the stock to go up, and if we're buying a put, we're predicting that stock is going to go down. So when you buy a put, you make money when the stock is going down toward, what I'm saying, going down after you buy it. Okay.
Mm-hmm.
So this that number 12 in the front of this 12 EMA, it means that this moving average looks at the previous 12 candles. So if you count 12 candles back at any given time, it's looking at the previous 12 candles, and it's trying to help you predict if the stock is going to continue to go up or if it's going to reverse and go down, or if it's already going down. It's trying to tell you when the stock is going up. Okay, so on the wolf chart, we use the 12 EMA. The 12 EMA, since it's only looking at these 12 previous candles, it's only good for showing us what the short term trend is. right?
Mhm.
And so if you're a swing trader, the 12 is probably one of the best moving averages you can use to swing trade. In the way that we had the chart coded, we use that 12, but all we're looking for is for candles that when a candle opens and closes, in other words, like if the entire candle, so you see how if I zoom into this candle, let me zoom in really close to this one. Okay. So you see how this candle has this long, skinny line on it.
Mhm.
Okay, that's a wick. And then this fatter part of the candle is the body. Okay, so you see how this candle has a long wick and this one has a body. So we use them terminologies just like a candle you would light in your house. So this is just a wick. The skinny part is called a wick. And so
Mhm.
every candle, if you look at all these different candles, they all kind of look different. This one right here is a little small candle like a plus sign. This one right here has a huge red body and a really long wick at the bottom of it and a very small wick at the top. But what we care about is something more important than that is we just want to see a candle uh when it gets under our 12 EMA, we know that the trend is going to go down if the wick of the candle and the body of the candle uh closes under this 12 EMA without any part of the candle touching it. So you see how if we look at this candle right here, you see how the wick is not touching this 12
Mhm.
and the body is not touching it, and then it we got into this downtrend. So if you were swing trading this from the daily time frame, once you see this candle do that, especially if you see two candles in a row back to back close under your 12 EMA, two consecutive candles, uh, without either one of them touching that 12, either below it or above it, that's when the trend is going to shift and give you a trend that you can trade. So if you'd have got into your put position after this candle closed under it, you could have rolled puts down, you know what I'm saying, for a very long drop, right? And so
Mhm.
let's look at a stock like Apple, because that was Bitcoin. And so we using that same principle. We're looking for candles that open and close entirely under that 12 EMA. So like the wick of this candle and the body of it is under it. And so we can see that we had this drop after we got that. And then we open and close the candle back above it. You see how we pushed up. So with the 12, the only thing that can flip the color of the 12, red or blue. So when it's in a downtrend, that means that a candle has opened and closed with the wick and the body of the candle not touching that 12. So that's what flips this color to red, and it shows you that we're in a downtrend. You see
Mhm.
that? And
Yeah.
then in order for us to get the signal that we're finna switch to an uptrend, you want to see a candle open and close uh, above it with the full body of the candle and the wick of the candle above that 12. That's gonna turn your 12 into this blue color. And so the blue represents that it's time for the stock to go up. Red means that it's time for that stock to go down and pull back. Okay.
Mhm.
Now you are only trading with nothing but the 12 on your chart. What you will want to see before you enter, you want to see two of these candles. You want to see two candles open and close fully above that 12 back to back. And then you could jump into a trade which is only using this 12 EMA. Right. And because that gives you a stronger trend reversal. Okay.
Mhm.
So we use the 12. The other moving average that we use on the chart is the 200. The 200 is looking at how many candles?
200.
200, right? So the 200 is looking at 200 candles. And so since the 200 is looking at 200 previous candles to determine what the trend is. Now we're on a daily time frame, so that means it's looking back 200 days. But if we're on a 1 hour time frame, it'll be looking back 200 hours because it'll be looking at 200 hourly candles. And if you're on a 5 minute time frame, it's still only looking at 200 5 minute candles. But since it's looking at so many candles, it can tell you what your overall trend is on the stock. So we use the 200, no matter what charting system you use. If they have a 200 on their chart, the purpose of it is to tell you if we're in a bull trend or a bear trend. So when a stock is above the 200 on the wolf chart, the line flips to this yellow color. Okay, so that yellow color means that the stock is in an uptrend or a bull trend. And so people use that interchangeably if you're new to trading. A bull trend, when they say the stock market is bullish or we're in a bull trend, it's just saying that the stock is in an uptrend, like the stock is going up, right? And then when the stock is under your 200, your bias has to lean toward downside because once you're under your 200, the overall trend of that stock is bearish. So even though it's pushing up, when you're under your 200, unless you have something to give you an early reversal signal, this is not the time to like be hammering long calls unless you're at like a critical support level or like a demand zone or something like that. But other than that, when you're trading, especially if you're day trading, you want to favor puts when you're under the 200 and favor calls when you're above it.